Happy Friday, Eric Bibel with the Bible team at Neil Home Loans. What a roller coaster of a week. The last 7 days have been nothing short of interesting, from the National Association of Realtors landmark settlement to Fed week and really everything in between. We'll dive into it and unpack really what occurred, what we're seeing, implications, and really some tips and tricks to help kind of navigate these new uncharted waters. So we'll start with, first and foremost, National Association of Realtors. And I want to lead by change is uncomfortable. And to our real estate community, we're in this with you. With every massive change comes opportunity. And no doubt the mortgage industry is not immune to those changes as well, as we've gone through a tremendous amount. But through all of that, we've had the opportunity to rise, combat, and thrive. And I expect the same out of our real estate community. Now, I want to lead with, there is still a lot to be told about the National Association of Realtors settlement. One, it's business as usual right now. Yes, there is pending litigation. It has to go to the courts, be approved, and ultimately would not go into effect until July. So there's a lot of time in between that component, a lot for us to still understand and digest and be able to deploy and communicate to our consumers. But for now, we need to educate ourselves. That's the biggest component around it. We got to fully understand what implications, as really from the settlement, it's drawn a ton of questions. It's opened the door to a lot of questions, but really the underlying component is what I am deducing from it is value. We've got to be able to clearly communicate the value a buyer's agent brings to the equation. We all know the buying process is stressful enough. Without representation, it can be even more stressful. So really that piece of the puzzle is something that we need to hammer down, double down on, and ensure that we're fully engaged and aware of how to communicate that value to our buyers. Neil has put together a very, very comprehensive email that you can send to your database, as well as some components, as we've been fielding a ton of questions about how to finance the cost of commissions into the loan. Now, obviously, there are still a number of components that have to be worked through. I know the agencies, Fannie Mae, Freddie Mac, Ginnie Mae, will start getting involved because this can have lasting impact. But for now, we want to be able to communicate as much information as we know to help empower you, the agent, to be able to communicate this to your consumers. So if you want information, I encourage you all to reach out. We'll send you what we've put together. With that, let's shift into the Fed week. There was a ton of anxiety walking into the Fed week this week. As we know, the Fed met on Wednesday. The expectation was, yes, interest rates were going to be left unchanged, but given the most recent drops of inflationary data, CPI, PPI, you name it, everything that I've been reporting on over the last few weeks was not pretty. Inflation was coming back. And with that, there was a ton of concern walking into this that Jerome Powell was going to drop hammer and say, hey, we don't like what we're seeing. But it was the exact opposite. And two key attributes that came out of it. Number one, the dot plot. You've heard me speak of this before. The dot plot is all voting members of the Federal Reserve unanimously go into a room and project where they see more interest rates in near, short, and long term. 3 rate cuts are still baked in for 2024. You heard me right, 3. That did not change. So market really liked that as it established certainty of where monetary policy is going. 2, Jerome Powell himself took the stand or the podium and was discussing that, yes, the inflation prints were not ideal. However, they're expecting, or the expectation, I should say, is that they will see very similar components to that of late 2023. We saw inflation rise in early 23, but it started falling again in late 23. So that piece too. But really the overarching component here is, yes, inflation. In order for us to hit that 2% target, we need inflation prints at 0.16 going forward. We know that to be impossible. So really the key driver in the Fed making decisions to cut rates sooner rather than later will be centered around employment. As we saw at the beginning of this month, the jobs report showed unemployment rise from 3.7 to 3.9. We see that continue to move up, and hearing about the layoffs, everything that's happening within the employment sector Once employment starts rapidly rising, the Fed's hand will be called and they will have to step in. So again, for now, we bask in it. Mortgage interest rates have responded positively. And with that, we're running with it. This is an opportunity for our buyers, sellers, you name it, everything in between, as we've seen inventory continue to build over the last few weeks and demand is only getting hotter. So with that, let's bask in it, let's win it, let's run with it. And again, if you want any information that we're putting together in regards to the NAR settlement, please reach out. We want to share. We want to empower you to ensure that you're communicating this information to your clients and again, driving as much value as humanly possible. As always, make it a fantastic Friday and an even greater weekend. Thank you.